And it sounds weird because a lot of people don't want to think of spending an extra X amount of dollars towards payoff because it's like, what could $200 do? It doesn't sound like a whole lot, right?
All right, let's get into it. Point number one, the most obvious way to get out of a HELOC is, imagine this. You got a HELOC 2 years ago, you remodeled the kitchen, and you paid off high interest credit cards. You're feeling great. Maybe you've been following the Clear Close for a few weeks, binge through our best videos, but now you're staring at the balance of your HELOC and you're asking yourself, how am I ever going to get out of this thing? Okay, if you've gotten yourself into a HELOC and no one has ever taught you how to get out of one, you've picked the right video. Welcome to the channel. We're the Clear Close, the mortgage experts that help you get clear to close on your next mortgage. I'm Peter and this is Jason.
Hello, I'm Jason.
Nice. HELOCs can feel like a revolving credit trap, but that's only if you don't plan ahead, right? The common fears that we hear all the time from people who are unsure about a HELOC or who are in the HELOC is like, oh, the rates are rising, the payments spike, and it's a never-ending balance because it's a loan that compounds with interest. Well, we have answers for that. But rest assured, there are exit strategies that don't include paying the monthly payment for 30 years.
Yeah, so these next 4 points we're going to be going into, the first one's going to be pretty obvious, but when it comes to the other three, just hang in there. It's got a lot of value and it's going to hopefully open your eyes on what kind of power you have having a HELOC if you use it correctly, right? And it's not just using it correctly, like your repayment strategy is going to be key in how you can grow wealth long term.
All right, let's get into it. Point number one, the most obvious way to get out of a HELOC is
Simple enough. Pay the darn thing the way it was scheduled to be paid.
yeah,
Right? Just make your
especially if
minimum
it's
payment.
especially if
Yeah.
this is a fixed rate HELOC that something that we offer on the channel. Click on the link below if you want to get a quote for your fixed rate HELOC. But what is quickly the benefit of a fixed rate HELOC, Jason?
I mean, you're going to get predictable monthly payments. It's whatever the loan term is, right? Like just an example, our fixed rate HELOCs, we have them available from like 10, 15, 20, or 30-year repayment periods. So whatever draw you make on it will have a set payment that will pay itself down to zero. So again, it's just the baseline strategy, just like nothing crazy behind it. You just end up paying it off in 10, 15, or 20 or 30 years, right?
Yeah. Whereas like a variable rate HELOC or an adjustable rate HELOC, it's structured very differently.
Same, but different.
Oh yeah, because like whatever the variable rate HELOC is, it's usually on an interest-only payment for the draw period. So once the loan actually gets to the point where the amortization starts, you're gonna have that payment jump. It's not gonna be just interest only. You're gonna have whatever rate it is at the time and whatever time left on the mortgage. So it's only then that you end up having a repayment. So you may have had a 30-year HELOC and the draw period was 5 years, you're going to have a 25-year payment schedule. If it's a 10-year draw period, like most of the banks, you're going to have a 20-year repayment schedule. And that's going to be a pretty sizable jump for most people. But yeah, basically pay according to the schedule, right? But you need to know what the schedule you're actually on is.
Yeah. Number two, this is a little bit more advanced level. So Jason, what is another way that people can exit a HELOC?
Paying extra towards the principal. It's like accelerating yourself to get to the finish line sooner. And it sounds weird because a lot of people don't want to think of spending an extra X amount of dollars towards payoff because it's like, what could $200 do? It doesn't sound like a whole lot, right? But when it comes to a mortgage, you're gonna end up sacrificing something for it, right? But that sacrifice of $200 in this scenario, say for example, at a fixed rate of 8%, an extra $200 a month will cut off 10 years. That's 120 less scheduled payments. And at the cost of what, a pair of Air Jordans a month, right? I don't know what else you could spend $200 on instead of eating out, right? For one weekend with the family, you stay in and you throw it at your mortgage or HELOC in this case, and you just shaved off 10 years. That's 126,000 in interest back in your pocket for what costs you how much? 120 payments of 200. It's only 24 grand. And it's going to save you $126,000 in interest over the course of that
Yeah.
loan.
Where can you invest money to pay $20,000 or $24,000 and then make 126,000, right?
There's nothing out there that beats that. That's how scary debt is, right? If you don't know what you're doing. So again, it's a sacrifice. Like for me, $200 is a weekend of going out to eat, right? With the family. So I'd rather just stay home and know I just saved 126,000 in interest. Because if I save 126,000 in interest over the course, that just means that's money that's in my pocket in the future because I didn't pay $126,000 in interest to the bank. I know the example we gave was a fixed rate, but this is where it's important too, especially if you got a HELOC that's a variable rate, you're not making any principal payments at all. So like I'm telling you, even though you got that interest only HELOC, just throwing the extra $200 on this one is going to help you a ton. Like especially the first 5-7 years of any type of mortgage, that's where it's interest heavy. So you need to minimize that exposure because again, it's just a waste of your hard-earned money here.
Yeah, your kids they like sushi and stuff like that. So
No,
so
it's not sushi. They like Korean barbecue. It's not
yeah.
cheap. And take
Your
them
kids,
out to
yeah, my
eat.
kids eat a lot too.
It's not just brisket. They want the ribeye.
Yeah. For me, it's like my kids eat so much fruit. We go to Costco, we buy a package of fruit, and it's like gone within a day. It's like, oh
It's
man, fruit's so
insane. Like
expensive
I
now.
can't get my kids to eat that in like a year, and I see your little one it's like devours it in like 10 seconds. I've never seen it before.
um, okay, so that's number two. Pay down extra towards the principal, not just putting extra money towards a HELOC because the lender or the bank they might not apply towards the principal. So make sure you tell them specifically this $200 extra or whatever extra that you're putting is towards the principal. Before we move on, if you're getting value from this video, hit that subscribe button and give this video a like because the more you engage with this video, it helps the algorithm know that you're interested and it helps get this information out to more people organically. So we really appreciate everyone who's subscribed so far and thank you for your support. All right, back to the video. Let's get into point number three. And this is a point that I might ruffle some feathers here. We're going to get into the part of the video where we don't want to pay the full 30 years or we don't want to pay extra towards the mortgage or the principal. How can I exit a HELOC without doing that?
Yeah, I can see why you think people are gonna get ruffled or their feathers are gonna get ruffled on this one. The easiest way is to just sell the house, right? You're either moving up or downsizing. So once you sell the home and you no longer owe that home, all the mortgages on that property are going to get paid off through the sale. So, I mean, whatever balance you owe on that HELOC at closing, it's going to give you a reset because the title is going to come cut a check from the equity of your home, right? Or maybe you were an investor and you knew we weren't going to keep that HELOC for a very long time, right? And it's perfect because now you know you're not tying up your hard earned cash into a deal. You're using the home equity ahead of time, right? So if you're planning on flipping, a HELOC could be a good option because you know you're going to go from property A, upsize or split a portfolio and 1031 exchange out of it, right? So you're going to roll that equity that's remaining into a future project while you're maybe working on another one or a different acquisition. Or this one happens a lot for investors. They find another property they want to get into, but they don't have time to do the 1031 fast enough because they're not done with what they're working on, but they can't let that opportunity pass them by. So we take the HELOC equity, put it down, buy another property, and then eventually continue on with growing your portfolio, right? Pros, if you sell the house, it's a clean reset. You're back to zero, no debt, right? It's
Mhm.
one less monthly obligation. Cons behind it, it's not free, right? It costs money to get the HELOC. It costs money to sell the home. Prepare to market the home for sale, and Again, the big unknown too is like, when are you going to sell the house? You don't know where the market's going to be.
Yeah, another thing, if I could add to it, is if you have a HELOC program that penalizes you for paying it off too early, that could be an additional cost to you. So you have to make sure, if you're already in a HELOC, that you read the fine print, that you ask your mortgage originator that did the loan for you, what happens
Mhm.
if I sell on this date? Or like, if you want a HELOC that doesn't have prepayment penalties, you can use that link in the description. We have a HELOC program that doesn't penalize you for paying it off too early.
That's a good point, Peter, because a lot of people forget if you watch more than one of our videos, like the only thing, and I say this a lot, it's like the only thing HELOCs have in common across all the hundreds or thousands of lenders out there is the name that of the product, HELOC, home equity line of credit. But the underlying product itself is going to vary depending on bank, credit union, direct lender, or investor offering that product. So again, be careful or be mindful of that when you compare and ask questions, because more often than not, these big bank products I've seen, if you pay it off too quickly, they will penalize you. They call it an early closeout fee, early repayment.
All right. So, Jason, the last point, what if I don't want to sell my house and I don't want to start, if I'm in a variable, I don't want to start the amortization process, the payback process, or if I'm in a fixed, like I'm not done with my remodeling. I need this line of credit open to keep drawing from it. Like what are my options?
A very common option. It's a refinance, right? It's not a full first mortgage refinance, but you can, as long as you can qualify it, like in the other videos we talked about with not just equity, right? Credit. It's about capacity, right? So you need to be able to have income to qualify for it again. Your credit score has to be there. And yeah, it's going to look at your full financial picture, but you're going to be able to, I would say this final one's the most important one.
It's like resetting the clock.
It's resetting the clock, correct. So like if you get a new HELOC, now you got a new draw window. I have a lot of clients that will get that HELOC, go through that draw period, and before it ends, we'll get a new one because they want to continue to invest, right? They want to have access to that capital because new HELOC, you get a new draw window. It's just not just about like repayments only, right? Because with the line of credit for the use cases that we've gone over, like an investor will constantly be paying it off and using it again to establish a portfolio or finish a renovation project. And it's just they're cycling it because there's a purpose behind it, right? And having access to it. So it's the same thing goes for other people that want the HELOC for life's expenses, college tuition. You know, you have a bonus coming, and then you need to make a big purchase, but you don't want to break your stock portfolio to do it because the last thing you want to do is sell Nvidia, right? Or Tesla. I don't know. Whatever good stock you got right now, you might not want to sell it and realize those gains because if those like from personal experience, I would rather tap into a fixed rate HELOC on my home equity to finance a bigger purchase over having to sell a stock or break a CD and pay penalty on that on and then get hit with capital gains, right? Short or long term, right? I'm not a CPA, I'm not a financial advisor, but just from personal experience, like if you break any investment like that, there's going to be tax repercussions because Uncle Sam
Yeah,
wants
like
it. But
drawing from your 401k early or something like that.
whatever reason it is, it's like it's not cheap to access that money, and it's very cost prohibitive if you really look into it. I would rather have my access to my equity through my HELOC so that I can make those big financial purchases as needed at a very reasonable cost, right? And then if my plan is to wait for my bonus to come in and I just dump it right back, and then now I have access to that rainy day fund, right? So it's again like if getting back on topic here, how to get out of a HELOC, like or in this case, how would we get out of this HELOC that's about to expire because you're at the end of the draw? You can reset it, or you can reset it to a new HELOC. You can reset it to a new HELOAN, or you know what? I don't want a HELOC or a HELOAN anymore. Market looks better. and it's not 7.5% interest anymore, and I can do one at 4%, 5%, 6%, and just do a cash out refinance on a 10 or a 15-year mortgage instead, that might be worth looking into. If I want to give my like plant the seeds early for the next 24 months, guys, if you're watching, the window's going to come, and I don't think it's going to be a 30-year cash out market, especially if you're financially prepared. I would personally be looking at a 15 or 20-year cash out refinance if the rates give the right opportunity to do so, because you're going to accelerate what you're at now from your pandemic mortgage to owning your home probably 5 to 10 years faster with that strategy.
Yeah, if you guys want to hear us talk more about that in depth, please give us a comment below with the word
Get rich. That's the key word. Get rich.
get rich. Oh, I like that. Okay. If you want us to talk more in depth about cash out refi, go ahead and comment get rich in the comment section below. Remember, there's more than one way to get out of a HELOC. You know, the standard way is you pay it off, you could pay it down faster, or you can sell the house or refi into and reset the clock on it. These are all viable ways to get out of a HELOC. There's no way to actually not repay your loan because you signed a contract. But there are strategic ways to build wealth through a HELOC that doesn't include paying for 30 years. So if you want to hear more about that for your personal situation, use the link below, schedule a call with us. We'll be glad to help you. All right, that's it for us. We'll see you guys on the next one. Bye. And if you want to know how a fixed rate interest HELOC works versus a variable interest rate HELOC, we just did a video on that and you can click right here. Or if you want to know how to avoid the most common mistakes that people make with their HELOCs, click on this video here.